Japan's economic landscape is one that has been shackled by deflation for a quarter of a century. But recent developments, including strong wage growth and broadening trend of rising prices, have sparked hope of a potential turnaround. However, caution remains as these price hikes are largely attributed to higher import costs. The sustainability of wage growth remains uncertain, a crucial factor in determining if Japan can finally bid farewell to deflation. Japan's inflation rate has hit its highest level in over 4 decades, exceeding the Bank of Japan's 2% target for more than a year. Yet, both the government and central bank expect inflation to slow as the effects of high import costs gradually fade. The rise in prices driven by surging import costs of raw materials has impacted households. Real wages have continued to fall despite promising pay negotiations for 2023. Japan is now facing a phase where labor shortages could potentially drive wage increases. However, addressing this trend and improving labor productivity are essential. While Japan grapples with its economic transformation, it faces other pressing challenges. The nation's fiscal health ranks among the worst in advanced economies, with debt exceeding twice the size of its economy. In this context, the government's focus on tackling the declining birth rate and boosting corporate investment over the mid to long term is gaining prominence.